All right, welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is Wednesday at 8 p.m. EST. And before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, so we're going to get started with the 10-year Treasury real quick here. Not much has changed on this, and don't expect much to change day by day. But essentially, we are just chopping sideways, consolidating. I consider this to be a bullish reset. We're basically just going sideways on the chart while our indicators or oscillators like reset. So, essentially they're just exhausted. And, now they're cooling back off. So I would expect at some point in time in the near future us to come down as low as 1.46, somewhere around that range, and then start to get our continuation up to the 2%. All right, let's flip over now and take a look at the dollar, DXY. Essentially exactly what the hypothetical situation that I spoke about ended up, basically just happening. The white support line was the one we were paying attention to based on these previous lows right here. And essentially we came down to it. It looked like we were breaking through it. And then, I put this yellow line here and said I wanted to keep an eye on that and see how that corresponded. We now basically found support on the yellow line, moved up. We've got obviously a lot of our buy signals coming in here. And, we're basically back at resistance, back inside the bottom of the range. So I think more likely than not, this will potentially end up being our bottom, like down here in that 90 range. But the most important thing specifically that I spoke about is not the diagonal line. It's not what line you're looking through. It's not if you're looking at daily closes or weekly closes. None of that mattered. The most important thing has and will always be where the lows come in. So we have a low right here, then we have a higher low right here, and now we have a third higher low. And that's what we want to see. If we come down here and take out this previous low, that's danger. And if we take out this low right here, obviously my whole thesis on the dollar, will obviously have been invalidated at that point. And my whole thesis just being that we broke out of, a consolidation downtrend pattern. And now I would expect to get the measure move or key Fibonacci level retrace before more continuation to the downside. So in this specific example, I'm looking for a 50% retracement of the sell-off that would take us back up to like 96%. 96 rather, and then that, and then more continuation to the downside. This essentially just being like a relief rally in an overall bearish trend, which it clearly is. Obviously, I don't have to tell you that. So let's take a look now at our indexes. What's up, brother? Good to see you, lazy boy. I assume I'm coming through nice and clear there. Here we got the Dow Jones Industrial. We popped back up to the top of the range. Basically just did a repeat of the same exact previous candle. So nothing changed here for me. I still consider this once again a bullish consolidation. We're outside of resistance. We're at all-time highs. There's nothing on this chart that tells me to be bearish. SPY, S&P. Once again, we have broken out of key resistance. We're showing a little bit of weakness right here. Very clearly exited the bullish control zone. Multiple red histograms in a row. Typically, we'll bounce this area when we come down to the slope line like that. But once again, pretty much all the resistance is done. We're through it all. There's nothing above us. We're in a blue sky breakout, basically. We have a couple days of chop or like sideways consolidation. But again, unless this starts violently selling back off, in which case I would expect it to find some support at like key moving averages or, this resistance turn support. But right now, this just looks like a bullish consolidation inside an overall uptrend. Now, this is where we start seeing some weakness. This is IXIC. This is just the NASDAQ. Just looking at like some tech, basically. And essentially, this is an overall bullish pattern, but it did exactly what we were expecting. We got like the double top scenario right here, and now we've been selling off since then. We're about to get the 821 cross again, and here we are coming back to our upward sloping support line. So I would expect support to come in along this blue line, which lines up perfectly with the 89-day moving average in purple right here. So, I'm expecting support right there. If that breaks, we could start paying attention to lower targets. I would expect us to essentially come back down and retest either of these. This is essentially like, just to give like a little bit of a comparison, this is sort of what we were just looking at, with the dollar. We're selling off. We break out of that we get a move back up, and then we either come back down and retest, or it was DXY rather, I'm sorry, retest that horizontal or that diagonal. But it's less important if this saves right here as if we take out that previous low or that low after that, because then we would expect continuation, at which point in time the target would be basically that wick, which would be at the 200 exponential or simple. So it's the same techniques over and over again and the same rationale behind them. And then once you just see it happening over and over and over again consistently, you can get a very good idea as to how to like operate that theory, or it playing out inside of like your trading plan. So with IXIC, overall this is still a bullish pattern, but you would expect it to come back down here to like 13,336, and then come back up and retest the top, and then just basically fill out this pattern until theoretically you would get the break to the upside. Probability wise, you get the break to the upside. If somebody told you, I'll give you $1 if you're right and $1 if you're wrong, and then basically tells you like, hey, the probability of this breaking out to the upside is 66%, probability of breaking out to the downside is 33%. I mean, you're basically looking at a 2-to-1 scenario to take a trade to the upside. So theoretically, you would buy support down here, and then you're positioned already for the breakout to the upside. And then in the event that the 33% of the time, that this breaks out to the bottom and the pattern actually is a double top, and it's not in fact just higher lows inside of like the same high pattern that breaks up, if it instead breaks down, you're out of the stop loss. But if you take that on 3 different sectors, on 3 different markets, on 3 different charts, the likelihood is, based on statistics, that this pattern will break up 2 times and down 1 time. So again, if you took the exact same trade pattern, setup, everything, dollar value, and you took it on like the NASDAQ, and you took it on Dogecoin, and you took it on, whatever your third choice is, 2 of them are probably going to break to the upside, one's going to break to the downside. So all you do is make sure that, with the breaks to the upside, that you're profiting more than that single break to the downside, which is obviously easy in like a 2-to-1 scenario. So that's again the rationale behind like some of these triangle patterns, and why you can just consistently take them very nonchalant. And you just know, like, statistically, that pattern is going to break out over time more often than not in your favor. Russell 2000, again, this one's showing some weakness like tech. It looks a little janky right now, but I had drawn in this hypothetical head and shoulders pattern and how I didn't want to see that happen when we started to get like this break right here. So when we got the break back up, I said specifically I didn't want to see it top out between the 786 and the 886, which statistically, that almost always happens. If you get a push back up and go above the 618, you're typically going to top out between the 786 and 886. So I didn't just like guess that that would be the right shoulder. It's like a combination of symmetry, statistical possibility of that Fibonacci retracement versus breaking out to new all-time highs, or even underperforming. Because a lot of people thought, oh, this is the underperform, and then it's going to break down. Well, maybe that was the underperform, it was going to break down, and then somebody took advantage of this little stop hunt right here to chase it up a little higher to get that momentum to break it to the downside. Because now, here we are back at that blue resistance, support line rather, and a couple moving averages. And if we get the 821 cross, we break down from the 50-55, we break down from our blue, diagonal right here, support. The next target is going to be basically the measured break of like this pattern right here, or another key Fibonacci level, which is essentially going to take us back down to the neckline of the pattern, at which point in time we would expect to find support. But if that breaks down, then we get the measure move of the head to neckline. So it's, it's a combination of all these small little patterns and small little moves and moving average crosses and Fibonacci levels, and it's just like steps in the direction. And you could be right for 10 steps in a row, and then all of a sudden, you turn around and start walking back in the opposite direction. So the key is to just make sure that we take some profits along the way. Because if we get correct right here and it tops out, and then it comes down here, and then we, don't find support, then our next support level is going to be the neckline. So maybe we want to buy that, or maybe we wanted to sell this, depending on like the direction we think this is going to happen in. But it essentially allows us to like take long-term positions and scalp from ideal areas. Because I know, like, I can't speak for everyone, but a lot of times when I would take a position on something, when I was a newbie in this game, or, buy something or whatever, it would almost immediately go in the opposite direction. I'm thinking, damn, why does that always happen? Seems like I always buy at the worst times. Well, that's the market, like psychology working against you. Like, you're thinking about buying something, you're paying attention to buying it, you're watching it on a regular basis, you're about to buy it, and then all of a sudden it shoots up, and then you're like, damn, I knew I should have bought it. So obviously you're paying attention to it, so you see all the moves up, and then when something moves the other way and it goes down, and you're like, oh, I'm so glad I didn't buy. Like, I knew it was going to go down. I'll wait till it goes down further. I'll wait till it goes down further. I'll wait till it goes down further. And then all of a sudden it turns around, starts going up, and you're thinking, damn, I knew I should have bought. But I mean, you don't think about all the times when you were right that you made the right decision. You only think about like the one that's wrong, or vice versa. You don't think about all the times when you were thinking about opening a short position and then price skyrocketed to the roof. You don't think, oh, I'm glad, I listened to my gut on that one. So you can easily like get in your own head in the psychology. So the most important thing is to just recognize what works, look for your patterns, look for your fib levels, look for whatever, and then go from there. And I mean, that's like strategy wise what works for me, obviously. So, on a situation like this, I'm just looking at how this trade can turn into the next trade, into the next trade. That way I'm positioned for it at any point in time. But regardless though, maybe this comes back down here and finds support on the neckline, and then this doesn't look like a head and shoulders anymore, which we'll see on our next chart. And then we just start skyrocketing to the moon, and you're still thinking, damn, I knew it was a head and shoulders. I can't believe it didn't break down. Forget about that. It was just one of many patterns that didn't play out. It's not a big deal. And again, it's not financial advice. I'm not your financial advisor. I'm just telling you like some of the ways that this can step into something more important, like a little scalp trade or a little swing trade turns into a nice position, turns into like a long-term holding. This is XLE, energy sector. This one basically broke out of our continual lower highs. It was obviously a, nice position from here. We're well on our way to the top of the range and retesting the previous high right here. So, not much to say on this one. Essentially just key area got broken, and now we're seeing that continuation, which is what you would expect. Now here we have the ICLN. It's the clean energy ETF. And, essentially we talked about these key levels here. We had first this descending trend line right here, this red one, which was very clearly like the resistance here. And it looked like we were forming a descending triangle. And then we broke slightly above the red. But what I was specifically talking about was I wasn't convinced by the break above the red. I wanted to see some kind of follow through. And more importantly, I wanted to see this purple trend line get broken. So we came up, got rejected before the purple trend line, obviously. And now here we are back down at the bottom of the range. So this looks like even more clearly now like a descending triangle. And this looks like a little double top, like fake out, a failed breakout. So now we have 1, 2, essentially 3 lows here. This, you could argue is the same low, but essentially it's a low and then followed by 2 lower lows. They were lower than this one. And then now here on the bottom, we have a close right here with a wick to the bottom. We have a close right here, which is basically at the bottom. And now here we have 2 red candles in a row at that bottom as well. So again, rather than looking at this as, a fake out or whatever, you could look at this as a failed breakout. And then we can essentially just take that same move, that we were paying attention to. And this is always a viable option either way. And this is a perfect example of when I just so happened to draw that blue arrow on there, as we were potentially getting that breakout. But in all reality, descending triangle predominantly breaks to the downside. So this is going to break out to the downside 66% of the time and to the upside 33% of the time. So again, the probability now that we're testing that support a third time, we're eating through buy orders and there's less, and then we come back to it and we buy more away and half of them are gone again, and then we come back up here and then we come back down this time, and maybe this is the time when we finish all those buy orders off and there's more selling than buying, and then we break down from that area. Well, at that point in time, what we're looking for is these other 2 trade setups. And this is what we're hoping for. We're hoping for a better position at a lower price. This is good and everything if it continues to the upside and, we get continuation, obviously. But ideally, I want to see at least a 382 to 0.5 retracement on this. And we had essentially, the key reason I wasn't too ambitious about this situation, and I had spoken about it, but this is a great time to talk about it, is when we broke down from the 236, we essentially turned back around at like an insignificant area, in my opinion. There was nothing really here. There's like some moving averages, but as far as like the actual Fibonacci retracement of the overall uptrend, it wasn't like a key level. So it looked more like, to me, we had found support on it, failed and broken below it, and now it was acting as resistance. So even though we got back above it, we couldn't maintain, then we couldn't even get back above it, then we couldn't even get back above it. So now more than likely what I would expect to happen is that continuation. And based on Fibonacci, I would expect it to come back down to 1971 based on that little measure move target of this little triangle right here. that we have. I would expect it to come back down closer to like the 0.5. But honestly, even if it came down to the 618, I would still be interested in it, as overall I would consider that to be like a healthy retracement in a predominant uptrend or bull trend or bull market. But, I'm not necessarily going to just go all in at the first key fib level. I'd be more likely to take a position at the 382 and then expand that position at the 0.5. And then if we break down below the 0.5, maybe it takes out my 382 position and then I purchase more at the 618. Or maybe this chart's just looking real ugly, or the markets are looking real ugly, and I'm not even interested in this position at all. But, that's why obviously we have hypotheticals in place. So now when it sells back down here, I'm not like, oh man, this is it. I can't believe it's about to break down from here. Why didn't I plan ahead? Well, we did. We planned ahead. We're ready for it. We're excited for it to break down. Even if it does go to the upside right now, it's just less capital that gets deployed in that specific trade. But again, 66% of the time, it's breaking down, 33% up. So if we play enough of these triangles, we play 3 bearish triangle patterns in a bearish way and 3 bullish triangle patterns in a bullish way, I bet when it's all said and done, 4 of those positions win and 2 of them lose statistically. Probably 1 in each direction loses and 2 in each direction win. And then, also on top of that, by taking like nice risk reward trades, if we have a trade that's like 2-to-1 risk reward to the upside, and then we also have a pattern that's going to succeed 66% of the time, if we take that same trade 3 times in a row, we win on 2-to-1 risk rewards, we lose on 1-to-1 risk reward, and then we end up net higher because of it. So when it's all said and done, if every time you win $2, and every time you lose $1, if it's 50% of the time you're flipping a coin, you're still going to win with that. But when you add in a second variable and you say, now I'm going to win that coin flip twice, plus I'm going to win $2 instead of 1 every time, you're exponentially gaining faster. And that's why it's so important to have basically like a 3 or a 4 tiered structure of investing, which is how I do it, which is essentially taking into account not only the risk reward of the trade, but the probability of success, and then on top of that, position sizing, like appropriate position sizing. Because if you don't position size correctly, you don't allow yourself enough opportunity to win statistically over time. Because if you only make one trade, even if it's a 95% of the chance time, you're going to win that trade. If you right off the bat, blow your nut on that 5% chance that it fails, you're done. You don't get to play the game anymore. And the key is to play the game and make money, or increase your net profits or net value or whatever you want to say over time. So ideally, you want to look at a realistic amount of trades that you can take without depleting your capital, assuming you have a limited number of capital, which most people do. And then on top of that, you also want to look at it from the other point of view, like, okay, if you have $100,000 and every trade you make is for $100, you're going to feel unfulfilled consistently because you're not appropriating a high enough amount of your dollar value. In the same way that, people that go all in on something like XRP and then have to sit around for an entire bull run that's been going on now for basically a year, and throughout that bull run, things like Dogecoin are up like 100 times, Ethereum's up like 40 times, Bitcoin's up like, 12 times. All these things are just massively up, and like some of them are up. I mean, Ethereum's up, over 2 times its all-time high right now. A lot of other things are up. Binance Coin's up like 25 times from its all-time high now. And then XRP guy's like just sitting there with his XRP in his hand, like, when's gonna be my turn? Ooh. That's why you don't go all in on something, because you missed out on an entire bull run holding XRP like an idiot, waiting when's gonna be my turn while everybody zooms by you on their rocket ships. Well, that's just because you don't know what you're doing. You're all in on something. And that's why when I hear somebody say, I'm all in on something, I say, I'm all out on you because you're a moron. Okay? Because nobody wants to miss out on gains the same way they want to lose. It's the same exact thing. So if you just say, okay, I'm going to appropriate my account now, my total amount that I have to invest or trade into 10 different assets or 5 different asset classes, or even if you're just all in on crypto, but at least you're buying different cryptos, you're so much better off than that one dude who's just been sitting around for the whole bull run, watching everything go up, watching all these gains, watching Dogecoin millionaires get made, and you're sitting there with your XRP like, we're almost to all-time highs, guys. We're almost back to where we were 4 years ago. Like, we got this. We're taking over. I mean, it's like honestly laughable. What's Lazy Boy say? Training your mind. Yeah, that's it, man. Yeah, I mean, well, that's the idea of it is buying at the wrong time is essentially just like your mind finally like succumbing to like that FOMO or like whatever it is. And you think, oh, F it, I'm just going to buy now. And like statistically, most people's minds are going to like break down around the same time. Like, I mean, if you did some weird like torture experiment, I'm sure there's like a certain amount of time, like when somebody's like tortured being questioned, hasn't slept, hasn't had food, hasn't had water, like there's probably like a certain amount of time after like 2 days of that, probably like 95% of people would break. And like you could look at it like statistically. I know that's kind of a weird analogy, but it's like the same thing with like markets. It's like maybe like once it's up 10%, like a bunch of people buy in. Once it's up 20%, a bunch more people buy in. Once it's 50%, 100%, 1200%, it's like, oh my God, when am I just going to break down? And there's always going to be some people that just never break and just move on to the next asset. And then there's always going to be those people that are just right there with the rest of the crew where like, the majority of the time they sell at the absolute worst time because they're just statistically a regular person, or they buy at the absolute worst time because statistically they just fall right into that like perfect little section of, I don't know what you want to call it, the masses, the FOMO masses. So let's jump around today, and we will go to tech next. This is probably going to be like the worst looking of everything we're looking at, but that's okay. So basically, crossing 821 to the downside. I'm on the daily, obviously, for Tesla right now. This thing is like literally playing out to a T, exactly what we've been discussing. We sold off exactly to the 50% Fibonacci retracement. We came back up to our 786 of the internal retracement. Well, we topped out between the 618 and 786, but exactly where we were expecting. Got rejected, came back down. We are now putting in our third higher low, finding support right here. And this is that same scenario again, where we now have like a channel pattern after breaking through a key resistance. We've retraced to a key fib level. So now what the question is essentially, are we going to find support and keep moving up here and then break out of this internal retracement to the upside and get continuation? Are we going to break down from here, put in a new low, and break out of the internal retracement and continue to the downside, which statistically has the highest probability in my opinion, because this looks like to me like we have topped out our three wave, and then we have an A down, a B up, and then we'll get a C down to either the same low or typically a lower low, at which point in time we would just fulfill what I'm expecting to be our pullback to as low as like $250 long term. And now again, it doesn't have to get there. Maybe it gets down to the 618 and turns around. Maybe it gets down to this other key support, turns around at like $450. I don't know. We got to play that by ear, but just giving a rough idea based on our previous waves and our Fibonacci extensions and targets and percentage pullbacks based on our Fibonacci levels. If we saw a similar pullback compared to our initial pullback of what I'm considering to be wave one, back down to the top of wave one with our wave four potential pullback here, that would give us somewhere in that like $250 to $350 range. Now again, in a bullish market and typically in a wave three of a longer pattern, you would expect this Elliott wave pattern typically to find support at a higher Fibonacci level, so potentially as high as the 382. So if we got back down to $350, I would be very happy to buy there versus buying at $670 and then this breaks down. So for me, there's a very low reward ratio to buy Tesla right now without more knowledge. If we see more knowledge and this starts looking bullish to me, I'd be more likely to buy back into Tesla, anticipating higher prices and continuation to the upside. If so, that's, there's situations where I would be willing to buy back into Tesla at a higher price than we're at now, because there would be a higher probability of success that we go to higher prices. As we're right now, there looks like a high probability of this price going lower with very little reward to the upside before I would know for sure. So essentially there's a bunch of reward to the downside if we potentially go lower, and a high probability of that reward playing out. Versus right here, there's very little reward to the upside taking a long position right here, because I have to basically just go a little higher before we're putting in new all-time highs, in which case I'm bullish again anyway. So I might as well just wait till we get to new all-time highs to take a long, and then I'm bullish and can buy into a continuation trade versus taking a long right here and then being wrong and us getting further downside. So in my opinion right now, most of tech looks like that. Most of tech to me has very little return to the upside without taking out the all-time high, in which case I would then be bullish versus a high probability of further continued downside. And to tell you the truth, the more candles we put in a row at this 382 fib level and at this blue horizontal, the more likely we look like we're just going to gap down and break through this key level and get continuation to the downside. So, and we'll see an example of that on some of our other tech stocks. And that's what's so beautiful about looking at a bunch of other stocks or cryptos or whatever in the same sector as what you're looking at is sometimes one thing will be slightly more bullish than the market or slightly more bearish than the market. But by looking at like an index or an ETF or just looking at multiple like higher level performers in the space, typically like looking at the top 3 tech stocks instead of just your favorite one, you're going to get a better idea of the overall sector. So in this case, we're looking at NEO now. So what's the difference between NEO? Very similar in what it does, slightly less established, obviously a foreign company. So now you have a couple other variables that we can take into account and maybe measure like what those are, how those are influencing it. So we're still making like EV vehicles. We're still a technology / car company, but now here we're Chinese instead of American. Now here we're like, a younger company instead of an older company, like etc. We're less diversified because we don't have as much into like solar panels and stuff like that. So essentially now we can take into some of those other variables and then look for patterns within the market in different spaces or the same space. Like overall, the Chinese markets right now look weaker than the American markets do, like kind of short term. So then we can play that in as a factor inside of like our overall technical analysis as well. So in this case, this thing looks very bearish. It looks very weak, and it looks like we're very clearly topping out. You could argue that this looks like head and shoulders, where we have a shoulder way up here and then a lower shoulder here, and now we have a very weak right shoulder being put in, either this one here or this one here. It's a little ugly for me, honestly, but you could very easily argue that and continuation to the downside. We also have multiple lower highs. We have a very key descending resistance line that we broke out from. We didn't even get the measure move to the upside. This is overall a bearish pattern. We got the break to the upside, and now here we are basically back down at the top of the range. So you could argue that, is this the real pattern? Is it really just a descending triangle that just goes out further? And, we got a little ahead of ourselves, or this was a failed breakout, or, whatever, and that this is just an internal move of this move, and really this is a move, that's a move, this is a move, that's a move, and then we'll get another lower high. I mean, that's all stuff the market will reveal to us in time, and that's okay. We don't have to be perfect on everything every time. Again, the situation is we have this situation already in place. I expected us to get down at least to the 236, if not the 382. So once again, even if you took this trade right here and it doesn't play out and you get stopped out, you then have your position in place at the 236 to potentially take the trade, or more realistically, you would probably wait to see what happens and then potentially take a trade down at the 382. But I would be looking for essentially like a specific and hard reversal at a specific area, whether it's like support or resistance or a fib level or a moving average, etc. But a lot of these, especially tech sector stocks, you got to be careful of, because this thing could retrace all the way back down to here, which means in all reality we should be fibbing from down here. So we'll have to see, like, if it gets down here and reverses at a key level, maybe this isn't like a 1, 2, 3, potential 4, and then we'll get a 5th wave to the upside. Maybe this is already the full 5 waves. But I'm looking at this as, this was our wave 1, this was our wave 2 retracement, this is our wave 3, and now we're going to put in a wave 4 retracement, which again we would expect to be somewhere in between the 382 and the 618 of this sell-off. So like, does it sound crazy that NEO gets back down to $8? Yeah, it sounds pretty crazy, right? Because we got up to like 60 something. But then when you remember, NEO was actually at like $1 like not that long ago. It was actually at like $2 not that long ago. Last year this thing was single digit dollars. So I don't think it's that unrealistic that it sells off way more than people are expecting, especially considering it's showing like more weakness than almost anything else in the tech sector. Which brings us to Alibaba. Very similar chart. Once again, very similar chart. We have a very clear, resistance line coming in here. We're at support now. Now it is slightly higher support, but it's also a long-term trend line support here in green. And then once again, this looks very similar once again to like we're putting in a potential 5-wave structure. Now the wave 1 here, time-wise, is longer. It goes back very long, and then 2 pullback, and then the 3 up. But in all reality, very similar pattern, very similar potential sell-off where we could actually come back down here lower, but we've actually retraced heavy enough that just a sideways consolidation from here on Alibaba, and I'm ready to get bullish on this thing as soon as we see any upward action. So this actually looks slightly more bullish, even though like the short-term price action right here from when we topped out doesn't necessarily look that much better or that much different. The overall chart itself giving me like a bigger picture. So, you know, and again, I'm bullish on most of the things I'm looking at here long term, just right now, not necessarily. So now Baidu, you know, very similar again here. We have like a very clear uptrending support line. We're basically back down at that support line. We had a descending broadening wedge. We broke out of it and then failed to find any support. Broke down from our little support that we started making, like a low and then a higher low. Now here we are retesting that low again, potentially going to come back down to, you know, we're almost at the blue box area, which is where I said I would be ready to probably take a stab for this. But you could argue that this was already the test down here. So if we bounce right here and see strength, I would be very happy to take a momentum move back to the upside, at least for a partial internal retracement. If this thing shows weakness from right here and like a breakdown from it, I would be very happy to take a trade from a new lower low and like a false breakout and then see like some kind of movement back to the upside. But I'm not going to short this area until this high, you know, we've got a bunch of action off this trend line. If we break down from here, retest resistance, and then start showing weakness, I would be much more likely to short a position like this, which is a lot like what Lemonade was looking like and we were talking about. When I said I'm not going to short into resistance the same way I'm not going to buy at support. Because very often you see like a throw over or a failed breakout or failed breakdown followed by continuation. So to me, this looks like it's very likely to be bottoming right here in my blue box area, which is where I'd be wanting to take like a long position off of. And this is the type of thing too, where this could go from just a quick little scalp for an internal retracement to try to capture, you know, let's say, well, I think we're at the point in time where we could potentially put like an actual long in place, as this is what we've been, you know, essentially looking for. Let's say we put like a 9 or 10% stop loss, you know, just a retracement back up to like retest this green breakdown, depending when it happened, you know, would give us like a 28% trade. So that's 4-to-1 risk reward to the upside. And then assuming that this was like, say, a key Fibonacci retracement from our high down to our low, let's say we come back down here, hypothetically, and we get like a double bottom type scenario, start to show some strength off of like, you know, this same area again, or off of this support line, and we're able to take a trade. This move would be just back up, just a 50% retracement, just what we're looking for on the dollar, followed by continuation to the downside. Now in the event this actually turns into, you know, like that's the situation where it would be like a quick little scalp trade, basically. You know what I mean? Quick little like 4-to-1, high likelihood of success, a bounce off of support into a key Fibonacci resistance level, etc. So now let's say we get a more aggressive move to the upside. Well, let's look at what we got here. Now we have a 9.5% potential stop loss to the downside with a 61%, you know, to the upside, which would be a key rejection. You know, even if you said 45% up to the 618, or you just took profits at the 618 and let some of it run up here. I mean, you're looking at basically now like, you know what, a 3-to-1 and a 6-to-1 risk reward to the upside with a high likelihood of success based on the amount of times we have bounced this key support along the way. Not only the fact that we're in a powerful uptrend, but that we went parabolic right here and that we'd be basically coming back down to it, which would be a high likelihood that people would be reaccumulating along that long trending uptrend. Now, again, if this started breaking down or whatever, I would start looking at, once again, the broader picture and what the likelihood is of like a very deep retracement of like this entire structure. But again, let's look at the key area we're at. I mean, we made it back down to the 0.5 of that entire structure. Let me switch this, make it a little more visible. So we're back down at the 0.5 of that structure already. So is a 50% retracement of this overall move enough? I mean, maybe. I'd say probably yes. It's in between our 382 and our 618, right smack in the middle. key area that we would be basically looking to take, a retracement off of. Charles Dow theory says, after a long move, you would expect a 50% retracement, or like giving back 50% to the market, at which point in time bulls would step back in, reaccumulate in between the 382 and the 618, which would give you an average at that 0.5, and then you start to see continuation in the direction of the predominant trend, which in this case is very clearly bullish. So, might that be the trade? Will we even get to the 0.5 again, or will we get back down to a lower low at the 618? I mean, that's what you could buy. Let's say one share of Baidu at 200, one share of Baidu at 144, and then it averages you back out to roughly the 0.5, like 170 or whatever. So the theory is that if you buy one here and one here and one here, you end up average back at right here. But if it comes and reverses right here, you never get your second share or your third share. Or if it reverses right here, you have two shares now with a lower dollar cost average. It would be right in between where you purchase your first one at the 382 and the second one at the 0.5. So it would be right here at like our buy area. So you would have one here, one here. Your dollar cost average would be right here in the middle, and then you just never get fulfilled at the top one or at the bottom one. But that's okay, because that means price reversed, and now you're in a trade in the correct direction to the upside in profit without ever deploying that capital. So that's the idea behind, your different buy levels, different position sizes. And you can look at position sizes the same way as you look at charts, like as a macro or a micro. Like you might have an overall position of your portfolio in crypto that's 50%. And within that 50%, that's like your macro picture, 50% in crypto, which is too high to me, but I'm just saying like hypothetically for this. So you have 50% in crypto, and then inside of that, you have 50% of your 50% in Bitcoin, and then you have the other 25% in Ethereum, and then you have the other 25% split 5% each into altcoins. So now that's like your micro look at your overall portfolio. But now within that portfolio now, you might say, now let's look at our Bitcoin position. So it's 50% of our overall portfolio is crypto. Within that 50% of the position is Bitcoin. So 25% of your overall portfolio might be in Bitcoin. But let's say on any given trade setup, you're going to have 3 potential entry points for that trade also. You're not going to enter with the 25% right off the bat, and now you're all in on Bitcoin and you have no more capital to deploy. So now you're violating those rules. No, you're going to enter with, say, 10% right off the bat, and then 7%, or maybe you enter with 7% right off the bat, and then 7%, whatever totals up to your total 25% of your portfolio. So when it's all said and done, it's sort of like the whole Fibonacci effect, is that as you start to zoom in further and further and further, you see the same patterns and the same implementations of strategy being deployed within your accounts, like under the microscope. So it's like that seashell or like beehive effect. So, but anyway, that's just where I get like a little bit of my rationale, and kind of explaining why one trade specifically like Baidu looks better to me than some of the others, even though they're inside of the same sector, but based on not only like the actual retracements, but support. And then obviously, like, we talked a little bit last time about the difference between like our diagonal supports like this and just like horizontal support and resistance, and how like, much more recognizable horizontal support or resistance is. So now let's take a look at Apple. Apple has been one of the better performing of the tech sector. After it had its sell-off, it was able to get all the way back up to almost the 786. We already took our trade. Our trade was fulfilled. We were completely fine with that. We got our measured move. We got our Fibonacci retracement back to the upside. And now look what Apple's doing. The same thing that so many of these tech stocks are doing. They're just retesting that diagonal uptrend. And based on how bullish they are, is just how much of an angle to the upside versus like basically flat that support line is. But almost all of them are demonstrating that same support. The bottom followed by the higher low, followed by the third higher low. It's just a matter of how intense the slope is versus like just horizontal the slope is. If they're like super bearish, it's just a horizontal flat line, looks like a descending triangle getting ready to break to the bottom. If they're bullish like Apple is, it looks much more like this, where you're potentially getting into the range where if you find support here, you would expect a new all-time high. So, again, to me, Apple looks very bullish, and I'd much rather be in a position in this or accumulating a position in this right now off of support than I would much rather buy Apple's support right now if you gave me $1,000 and said either invest in Apple or invest in NIO, I would much rather buy Apple's support consistent higher lows rather than NIO, which is basically consistent same lows right here. Because this to me looks like it's about to break down and just roll off the table. You imagine dropping a bouncing ball from 10 feet up. The first bounce, it bounces 5 feet back up. The second bounce, it bounces 3.5 feet back up. The third bounce, it bounces 3.5 feet back up. And then like each time it bounces, it's using up its time at this level before essentially you run out of surface area for it to bounce off of, and then it just falls to the next level. And I picture that like if you drop the bouncing ball onto like your desk and it bounced a couple times, by the end of the reaching your desk, depending how long your desk is, by the end of reaching it, it's basically just rolling now, or it's barely bouncing, and then finally it just falls off the desk. And then where does it fall to? It falls to our next like key support level, horizontal, and it's going to bounce again, but it's going to consistently just bounce lower and lower. Because when it falls off the desk, we dropped it the first time, okay, from 10 feet up, let's say, and it bounced back 5 feet up. So maybe when it falls off this desk, it falls 100 feet now. So when it bounces back 50 feet. So the bounce was 50 feet. It was a bigger bounce than the initial bounce right here, but it bounced back to a lower level. So it's still very clearly in like a bearish trend if it's still bouncing, and then eventually you expect it to do it again, and then finally when no one's paying attention to it, everybody's forgotten about it, all the sellers have sold, and there's no one left. Now there becomes more buyers than sellers at that price level, and then you start to see it grind back out to the upside. And that's how this trend could develop back into an uptrend. But overall, that's like the rationale between why this looks more bearish to me inside of like the same sector as opposed to Apple. You know, we bounced down here basically. We bounced the whole way down, and then from once we bounced, the big bounce off the bottom was way higher. Instead of just topping out at the 0.5, we made it almost back up to the 786. So now we have a bounce, then we have a big bounce. So now do we bounce off of something sitting on the desk, and then we actually end up going higher and defy gravity? Or do we just end up, you know, it was just more bullish for a little bit because of A, B, or C variable? So again, a little comparison within the same sector, and then where some of those comparisons are coming from. And you could argue, well, it's because, you know, Apple is more of a universal company, because Apple is selling smartphones versus NIO selling cars versus NIO's more of a Chinese company versus, you know, you can argue as much stuff as you want. It doesn't have as much of a global market as where Apple does. Like, you know, again, you could look at all those micro factors within like a single sector. So, and then that's where the ETFs come in. If you don't want to take the time and look at the difference between the tech sector and look at why does Tesla look good and NIO looks bad, why does Apple look good and Pinterest looks bad, if you don't want to like mess around with all the individuals, is when you just say, I like this sector, I'm bullish on this sector, overall the sector looks good, I'll just invest in the sector. So so here we got Pinterest. Speaking of Pinterest, you know, looked really good on our bounce right here. Obviously our position and trade played out beautifully. Obviously we're very bearish on Pinterest off of this candle right here. Very clearly that has been the, you know, way to be, as now here we are exactly where we targeted, the 200 exponential and simple moving average. And again, same as like the table, we come down, bounce off it. We got a real big bounce the first time, but now what's going to happen now? Are we just going to bounce again real high, but to a lower high? Because that's still bearish and looks like an overall descending triangle. So very similar pattern here, but played out in a very different way. So again, Pinterest was very bullish compared to most everything else, and now honestly it's just as bearish, or technically I would say you could argue Pinterest is more bearish than most things, because it has now come down and taken out its previous low, as where most everything else is at least putting in a higher low. So is this what's going to happen in the overall sector, or for reason X, Y, or B is Pinterest just more bearish temporarily? So again, you know, this thing could get a massive pullback from the bottom here to the top. We didn't even make it to 236, as where something like Baidu is already like down at like the 0.5. So, you know, could Pinterest go back down to 40 or 30 bucks? Damn straight it could. So am I excited to buy it at 61? Not really, but I'd rather buy it at 61 and sell it at 85. You know what I mean? Then get bullish right here like all the other idiots were, and then it just gets rejected and loses, you know what, from, I mean, somebody bought this thing at $88 and it's down to $61 in 2 weeks. I mean, That's why these fib levels are so important. And like not only looking at Fibonacci, not only looking at the overall trend, but also something as simple and small as this whole pattern was very clearly identified to me and made me extremely bearish based on this one candle right here. Really this series of candles, but this one specifically. This shooting star right here tells me, wait a minute, this is not what I want to see at the top of something that's looking bullish, like it's about to make all-time highs. So every little bit, every little piece in our tool belt is so important, because if this saves your ass one time because you identify that shooting star rejection and you get out of this trade or don't enter a trade on this, that's one more success you have out of like your 50% chance or whatever. So now maybe you're batting 51% instead of 50%, or maybe you already had an advantage, so you're already batting 60% and now you're batting 61%. Every time you can use a tool to add that little 1% into your game right there, I mean, is like just exponentially more powerful in the end, because after years of doing this or practice or looking at a million charts or watching these patterns play out over and over again, maybe you're batting 70%, maybe you're batting 55%, whatever it is, but you're batting higher percentage through practice over and over again and through knowledge. And that's why we always talk about it's so important to like not always focus right now on immediate gains as much as focusing on getting better and actual knowledge and growing yourself. Because you can grow your account exponentially faster once you're knowledgeable and once you're good at something than you're going to grow it at when you're just mediocre and you're just getting lucky or whatever. So, you know, a lot of times it's easier to invest in yourself during a bear run or bear market or whatever, because you're not as worried about putting that capital to work. You're not as worried about being smart when you can just be right, because obviously everything's just going up. So Etsy next. I know this is like a real big one, real popular one and everything. Very similar chart right here. You know, we basically, this one just broke down to a new low. It's very clearly, you know, descending triangle type pattern. You know, this is like the same exact, it's the same thing. I mean, it really is. We're just looking at like different variations of the same thing. So in this case, you know, this one is more bearish because it has broken down to a new low and essentially broken down from a descending triangle, at which point in time. So now you have a bearish pattern, 66% chance it's going to break down to the downside. Breaking down a little earlier than typically. It would break down somewhere around like 66 to 75% of the pattern being fulfilled here. But you could also argue that because of, let me draw this really quick and then we'll look back at it. You could argue that this was actually like an outlier or a failed breakout. So in all reality, the initial pattern, if you had been charting this along the way, would have been something like this. So you have basically resistance, resistance, resistance. You break out of it, but fail to get the measure move and essentially end up double topping and then selling back off. So now you actually went about 66 to 75% of the pattern, broke out, and then the breakout failed. So now you've essentially just made a second pattern or whatever. Or you could even argue that if you were going off the wick right here, this was a little teeny failed breakout, and now we really are closer to 66, 75%. I mean, you don't have to be perfect every time to understand what's happening in the market. And as this is playing out, that this pattern could potentially break to the upside and then still fail, end up with like, this looks like gold now, where we broke out to the upside, got a double top, and then sold back off. And now here, you know, in gold's case, we broke down from here, and then essentially this same pattern just turned into more of like, you know, a downward channel. You know, on gold, we would break down from here, retest the 200 exponential and simple, maybe come back up, retest this level. And like what gold's doing now is potentially breaking out from right here. So look at gold, you know, a month ago or 2 months ago or whatever, and it looks exactly like Etsy, you know, or very similar to Etsy. So, and again, you know, it's just looking at the same pattern over and over again. And then we can look at the potential things that could happen. Maybe it does what like Riot did, where it fills out this thing, breaks down to the downside, and then all of a sudden just gaps back up and then keeps filling out the pattern. You know, again, same thing, different chart. Zoom is next. And then I'll jump over to comments and holler at you there for a little bit as we switch sectors. Zoom, you know, again, this one was very similar to like what gold was doing, but instead of finally breaking to the upside and retesting those top levels, it's doing what I anticipated, which was breaking down here to a new low, which again, I'm still, you know, even though it's been now 2 weeks since I put this trade setup in mind, and I specifically talked about I'd be looking to take a scalp or a long off the bottom of the range, you know, we can literally just move this out to, what did I have it at, 280? let's just move it a little further down and see. You know, this is still a trade. I'd be looking to take it, you know, off of the bottom of the range. So if we get back down here to like 280, 275, we'd be buying off of the 377 moving average, off of the bottom of this channel we've been operating inside of. We'd be buying support off of the top of this previous high right here. You know, very clear like resistance, flip support. So again, you know, we'd be looking at potentially breaking out of the bottom of this and being wrong, 8% stop loss, going all the way back to the top of the range, or even halfway to the top of the range, 38% reward. So again, we're looking at like a 5-to-1 risk reward, or even if you just took the little baby version of the trade back up to the heart line, it's still like 2-to-1 risk reward on the trade. So, you know, patience is key here. Zoom is going to look really good very soon. And say we were wrong and this just breaks back to the upside like gold does, we just never enter that trade. Or maybe we trade once it starts breaking out, or once we start seeing positive action. Once we're back above the 200 moving average. Remember, the specific reason I was not bullish on this is we broke below the 200 simple and 200 exponential moving average, finding resistance, 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 breakdown. This was our support, support, breakdown. So now we broke down from a key resistance and broke through a key support. So the most likely thing to happen is we're going to find our next support, which is the next key moving average of 377, and also the most important support that we've had, which is the bottom of this channel. And now, once again, I'm not that excited about this because the 200 exponential moving average already rolled over negative. It's got a slope to the downside now. 200 simple is going to roll over soon. And then to me, once we're below 200 exponential, below 200 simple, and they both have a slope angle to the downside, that's a freaking bear market. That's a bear trend. That is not what I want to be investing in. That's literally the point where my investment strategy goes to net long in this asset to not interested in this asset. And then maybe I'll take a stab along the way for either a scalp or a long position off of one of these key Fibonacci levels. But I'm not even interested in this thing again, realistically, until it gets down to the 382, the 0.5, the 618, or it just goes sideways so long that it's back above the 200 exponential and simple. So we're not quite there yet. And oftentimes, the reason I would take this scalp off the bottom of the range and the 377 is oftentimes you'll get that one last burst, that one last attempt, and it would correspond perfectly with the 200 exponential and 200 simple. It looks very likely that we're going to break down from here. Everybody's going to think it's over. There's no way this goes back up. It's done. And then all of a sudden it shoots back up to the top of the range, tries to break through. And then from there, maybe it gets continuation. And that was the perfect position for long term. It's no longer really a trade. It's just a position. Or, you know, we take profits right here and it breaks back down and shows weakness, etc. So, but again, you know, that's when we look at gold, we can see now how this could potentially develop. And we'd be looking at the gold chart. SMH, it's the VanEck Semiconductors. You know, I'm still looking at this exactly the same way. I'm actually looking at the semiconductor space very carefully, as it may be one, overbought and just going through a bullish consolidation right now, or two, it often signals or is like the canary in the coal mine for the whole market. So this usually tops out before the rest of the market does, shows weakness or strength before the rest of the market does. So semiconductors will get bullish early and bearish early. So a lot of times if you watch them and what's happening in the space, you can get like a little like preview of the goods. So you know like what's about to happen in the market before it happens. So, you know, we got a nice bullish candle right here. That's definitely good, seeing that get bought up like that. But again, you know, we broke down from that diagonal support that we had built up here. You know, we're still making higher lows. We almost broke through the top. We did have, you know, a couple bearish things coming through here. We did need to reset. So not getting bearish on this yet, but paying attention that this could be like telling us, hang on a minute. And if we pull up our moving averages too, you'll see now when we lost 821 back here, we saved it right here, retested to a double top. And now here we lost 821 again and broke down from key support. So that's multiple things telling me hard sell signal, 821 cross, multiple histograms below the slope line, breaking down from key support. That's a lot of stuff telling me that we're probably going down to retest the lows. And if we're retesting the lows, we're either going to test that previous low right here, or we're going to test the 200 exponential or simple moving average. And seeing as how they're in the same spot right now, $215 area looks very likely right now. So what was a potential trade right here, or something that might have interested me before, is looking less and less interesting to me now. Now again, I'm not ready to just abandon this, potential move to the upside or like abandon potential uptrend right now. But this is looking more and more toppy to me. So I would either go to like a more neutral position on this overall and say that, look, this trade might be done for now, and the market or supply chain or whatever needs a little time to kind of catch up. And, things like what's happening with Ford, where they're like, look, we're only expecting like 50% production right now. We're closing stuff down left and right because of this semiconductor shortage. Semiconductor is in a lot of ways like a commodity, in the sense that it takes a long time to get these things. It's not like somebody can just ramp up production and start making semiconductors and all of a sudden we'll just have a bunch of semiconductors in like a month. These things take forever to make. There's a bunch of problems with supply chain with these semiconductors. They need first off, your silicone and all your metals and all that stuff that goes into it. Then you need high-tech plants that are making these things, and they have to be making them to an extremely high quality, so they're not causing exponential problems with failures in the future. So you're not just getting cheap parts that you're putting inside of some $100,000 car or multiple $1,000 cell phone or computer or whatever it is. You can't just buy the China special garbage semiconductors. You need to have good quality ones with low failure rates. So now you have scarce assets. You have a bunch of time it takes and specialization it takes to build these. Now you need to have stringent basically regulations on the quality or quality control. And then on top of that, where they manufacture all the different bits along the phases of creating these semiconductors happens all over the world. So now you have all these shipping delays happening too. So you have construction factories that are not making the goods that you need to build these, the commodities that you need to build these as fast. So, okay, you have tons of silicone. That's not a problem. Well, now you need somebody to make them. Well, half the factories are closed. So you don't have nearly as much production capacity. Then all of a sudden you have all this extra demand for certain stuff because there's a weird tech shift going on because everybody's working from home and everybody's wanting to buy new vehicles because they're trying to buy hard assets. So now you have extra demand and there's all this extra stimulus money and people don't have to pay their rent. So even though there's not net more money in the system, there's less costs going out of the system, so more spending taking place. And then all these trends on top of each other, and then shipping is taking longer, and you can't produce as much of these things, and all of a sudden there's more demand for them. So now you have a massive bunch of factors that are going into this right here, complicating this on top of the actual chart itself. So it's very possible you could be massively bullish on semiconductors and the space over a 5-year period, but we could be getting ready to see a 6-month or 1-year massive pullback in these things while they can't make the quantities that they need or expect, etc. So within the overall market, maybe these are signaling that, okay, these supply constraints are driving up prices, and the best cure for higher prices is higher prices. So if we don't fix the bottleneck, the semiconductor issue, the shipping shortages, the time issue, any one of those issues is the bottleneck. If we don't fix all of those around the same time, this might constrain all the markets, because it's just going to drive up prices because it's going to get harder and harder to get semiconductors. So new cars are going to go through the roof and people are going to be paying premiums for them. And it's exactly what's happening with lumber right now. So eventually the prices are so high, people just say, I'll just wait. No, it's too high. No, I'm not interested anymore. So eventually the supply comes off, or the demand comes off, and then the supply picks back up, and then the market can renormalize, at which point in time it could be a consolidation, it could be a sell-off, it could be just a slow melt up. It could be anything, but eventually the prices will normalize. So while I'm massively bullish on semiconductors, I'm very, very attentive of the overall space and what's happening. And semiconductors are a specific example of why I still argue that there is microinflation taking place, but the inflation that we're seeing for the majority of what we're seeing right now is a deflationary environment, and we're seeing reflation through money production. We're seeing inflation of certain prices through supply constraints or bottlenecks, and that in all actuality, I still think we're going to end up in a macro deflationary environment. I think we're going to see most things going down in prices steady over time, as where a few things will just not be able to catch up or will overall increase in value. But I really do still believe that. Now, again, there's going to be some inflation inside of it, but until we see true wage inflation, the macro argument for inflation just really, I mean, I can't really be convinced until we see actual wage inflation, because wage inflation is what builds confidence. Confidence is what this game's all about. Consumer confidence is the most important thing in the world, because getting a stimulus check is cool. You might go out and blow it. Getting, unemployment check is cool for some people. You might go out and blow it or invest it or whatever it is. But the sustainability of knowing that you have a good job, the economy is good, you're making more money, you have more money to spend, you're living a better life, you're having more disposable income, etc. That confidence portion is what goes along with spending that makes everything so important, and why it's so hard to reinflate the economy. Because not only do we have to get everybody to take out all this extra credit and put their credit cards back up to like big, massive, like debts, and spend all the money in their savings accounts, we have to get people to think that they're going to continually be making more money and living more comfortably, so they're more comfortable just being able to pay their payments, their car payment, their house payment, buy more stuff, expand. Otherwise, you end up with like Great Depression scenario where people just like hoard everything. Like they're afraid to throw away plastic bags because they don't want to have to waste money to go buy new plastic bags. Or they save like every jar they've ever gotten and like put leftovers in jars when Tupperware costs like $5. Like it's that type of mentality, but exponentially over like whole generations. Or like what's happening with the price, like the housing market, where people are just priced out, where they're like, oh, I'm not even worried about buying a house because I don't make enough money, and the way house prices are going, I'll never be able to afford a house. So I'm comfortable just renting. And then you start getting in that mentality of, I kind of like the flexibility of being able to move every couple of years and never being tied down. And that's sort of like a change in the overall structure. And like a specific example of that would be, and then I'll get back into some TA. Specific example of that would be like rental cars or like leasing. Like back in the day, people wanted to buy a car. It's just what you wanted to do. You wanted a car. You needed a car. Maybe you wanted a couple cars, one for you, one for your wife, one for your kids while they're in college. So people want more and more cars. Well, after a while, people realize, man, it's kind of nice leasing. It's the same way as not buying a house. You're just renting forever. You don't have to worry about if a pipe breaks. You don't have to worry about this, that, and the other. You can move as much as you want. You get a new car every couple of years. So people start getting into that mentality. And then when technology changes on top of that also, and now you have like, oh, you don't need a car anymore because now you can just Uber everywhere. And like taxis were inconvenient before anywhere but a big city, but like Ubers are pretty freaking good, and like they're not that expensive. And like when you do the math, like Uber, it's not so bad. Maybe I don't even want a car anymore. And once again, it's like the freedom of not having a car payment or insurance or worrying about like repairing it if it breaks down. Because if your Uber breaks down, you just call a new Uber. So like it ends up with like overall shifts in the markets. And that's where like these crazy trends can develop into like long-term overall shifts. So that's why all these things together are so important. Not only that, but how all their correlation is so important. And then also why this is just like the absolute best time to be interested in these markets. Because we're literally at so many different inflection points, and there's so much potential like in all these spaces. It's unbelievable. So now going on to the next one, getting back on track, and then I'm going to jump in the comments for a minute. Peloton. I know like a lot of people were invested in this one. This looks like total crap. Obviously, this has a lot to do with some fundamentals. But, technically this chart already looked like total crap. And then conveniently, fundamentals come out on top of it. But what does this look like to you? It looks like a massive head and shoulders. We got a big shoulder right here, neckline, another head right here, another neckline right here, another shoulder right here. Breakdown from the neckline. This just so happens to coincide with the overall topping of like a lot of markets. Just happens to coincide with, some regulatory issues, and then also people dying, and then multiple recalls on Peloton. And now we're getting like a breakdown from a key level. Like, I mean, you can't argue. Like, and this is what I always say, show me the chart. I'll tell you the news. Like this is a specific, like perfect example for it. If you're looking at this chart already and seeing this head and shoulders is already starting to like very clearly develop, and then you start hearing about like potential like issues, regulatory issues, recalls, somebody dies, and then all of a sudden it breaks down and it's like, yep, Peloton broke down 15% in a single trading session because someone died. Well, did it break down because someone died, or was it a combination of all these things? Like, that it was already a massive head and shoulders, that a lot of things were already topping out, that we were already retesting key support line, that it was already looking bad. You know what I mean? So in all reality, like, I mean, this thing probably has a ways to go I know people are like, oh, it dropped massively. Like, let's get back in. I'm buying the dip. Well, be careful, because this thing has moved so much that this is the measure move from the top at 171 to the neckline at like $100. The measure move on Peloton based on a log scale, like percentage chart, is $25. You know, that's like collapse status. So, you know, again, do I think that's going to happen? Not necessarily, because when something's moved that much, the log scale measure move typically doesn't play out. But this is literally just the distance from the head to the neckline. And then once you look at it on this log scale, it's exponentially large, because it's like that massive percentage move. So, you know, maybe you don't get that much of a move. Maybe it just goes down to $75. Maybe it goes down to $50. Maybe we don't look at the measure move right here because it's less likely to play out. And we look more at like an overall like Fibonacci retracement, because I think it's more realistic that it gets like down to like $55 or maybe $40. I don't think it's likely that it would ever get back down to like that level, like without serious issues. If all of a sudden a bunch more people start dying from getting sucked up by like their treadmills, yeah, it probably does. But next, Walmart. Been a while since we looked at this. It hasn't done anything. It's still doing exactly what we talked about. The key here that we've been paying attention to was obviously off the bottom, breaking out the top, all what we expected. I said I'm specifically looking to take a short off of this 144 range, which we're almost at, which is that massive gap fill of that gap down here. Or I would be looking to take a long if we come back down to support. This to me was not adequate, but you could have easily took that long position. I wouldn't have been mad taking this long position off of this support 100%. It totally looks good. But the overall condition of the market and this massive gap right here and everything, I'm not overly bullish on Walmart in this time frame. I think there's still a high probability it comes up to $145 and then just gaps back down inside this range and capitulates down to like the same low or lower. Overall, I'm bullish on Walmart long term, but I don't really like this level. But again, I wouldn't have been mad taking that off of $140. And then you could always just move. I mean, you'd already be in profit. So of course it's easy to say that was a great trade back then. But I specifically said I'd more likely take this trade here, or I would rather wait for consolidation retest, which this is starting to look good now. You know, curving back up on the Stochs. You know, we stayed above the slope line. It's still angled blue to the upside. We got the 821 cross. We broke through resistance. You know, you could argue this with me is a good trade and why you want to take it. And I would have not argued against you. But my problem with this setup right here is I could argue just as much for the short as I could for the long. So I'd rather just not take that trade, even with a higher risk reward. But honestly, if this chops sideways a little bit more, if this cools back off and the knife comes back down, we get the cross to the upside, I think this will consolidate and go higher. At which point in time, you know, you could say, hey, I did take that trade and it was perfect. But I mean, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. But to me, I think there's still, I still think it's right now a coin flip, whether we fill this gap and dump massively or that was a confirmed breakout and we continue to the upside. I still say that's a coin flip. I think it's 50-50 in my opinion. ARK, ARKK, I'm not going to look at all of them. I know a lot of you guys are invested in a lot of them, but they all look the same. They just look varying levels of bad. Some look slightly higher because they got up a little bit higher here and made it to like the 0.5 or 618. Some look lower because they only made it to like 382. The truth is, let's be honest right now. Let's be honest right now. I was 100% right on Kathy. I'm sorry, but it's true. I called the exact top of her funds. I literally said that the problem with Kathy Wood is that she has like 1 or 2 years of profitability and her high level of concentration makes it so that it's going to look good. Like for instance, Kathy Wood is like famous obviously for her funds and how great she did over the last year and how many amazing calls she had and everything. But what did she really do though? She really just invested like a ton in Tesla and a couple other like key companies. So if and other than that has very little like actual long-term profitability like experience or like record of positive returns, which was my argument against Kathy Wood. I think it's great what she did. I think it's awesome that she was bullish on Tesla. I think she did a phenomenal job over the last year. I think it's great that she's a woman and in the space also, although I don't really consider that to be a constraint. But good for her. Touche. I'm very happy for you, Kathy. But the truth is if you look at a Dogecoin investor right now, somebody that said, I'm all in on Dogecoin and puts their life savings of $50,000 in Dogecoin, and then you look at their returns for the last year and how many good calls they made, well, I'm sorry, but everybody got beat by Doge. Everybody. So that idiot dude who just loves Dogecoin and went all in is better off than anybody is. So if we're going to go by our Cathie Wood stipulations and say she killed it over the last year and her fund had massive amounts of like uptrends and massive amounts of inflows and all this stuff, like in all reality, we got to really get down on our knees for Mr. Dogecoin and either open your mouth or pray, because that's your new God right there. I mean, not Cathie, because Doge is still crushing. So again, that's my argument, is show me Cathie Wood's returns after 5 years or 10 years or 25 years, and I will, by all means, I'll argue that she's up there with Warren Buffett and Ray Dalio and all these other guys. But right now, she's just a one-trick pony. And again, if Doge goes up for another 25 years, and you know you got some Doge investor 25 years from now talking about how they're the best investor in the world, they call Dogecoin, they went on to the bottom, by all means, I will show them the absolute same respect I will show Cathie after she performs for like 5 years or 10 years or 25 years. But again, I think the ARK funds will do well over time. I think she has the right idea, but this is my point back here, is this about to be a blow off top followed by capitulation. And I'm telling you right now, this is a descending triangle. Topped out, topped out, topped out, bottom, bottom, bottom. I mean, more than likely, this looks like it's going to have a breakdown. It's already down massively from the top right here, which is when people are getting extremely bullish. It's already down 30%, and I suspect it's probably going down a minimum of 45%. So even from where we're at right now, there's still a massive minimum drawdown, in my opinion, on Cathie Wood and these ARK funds. And again, very bullish on the concept, very bullish on many of the like stuff inside of these things. But what has to happen for this to take place? I mean, pretty much if Tesla just drops down to like $300 or 250 or 350 or something, it's pretty much going to drag all her funds down, and I'm going to be right about all this. So all that has to happen is that one trick pony, that Tesla, that Dogecoin, like has a big drawdown, and all of a sudden everything just gets hit. And that was my whole point. You know, and Dogecoin is a perfect example, because again, I am not saying that if you invested in Dogecoin and went all in on Dogecoin that you didn't crush it. But what I'm saying is that being right on something that goes parabolic does not make you a genius in the long term. Because everybody that was long on crypto for like 3 years in the bear market was quiet and had nothing to say. Meanwhile, stocks are doing all-time highs. But then all of a sudden, everybody that's 100% in crypto, they're massively bullish and they're right and they're huge investors and all this stuff. But like you just really like were persistent, and then finally it was your turn. It's the same as like the gold bugs. Gold bugs sit around for 20 years, 10 years, whatever, talking about how gold's going to go parabolic, gold's going to go parabolic, gold's going to go parabolic. I'm all in on gold, missing out on all the other markets and all the other bull markets while gold goes sideways or down. And then finally gold goes to new all-time highs. And they're like, see, I told you, this is it. The whole world's ending. We were right. You know, broken clock is right twice a day. And that's how I look at people that are like one-trick ponies, or, you know, it's good to have conviction in an asset or asset class or whatever it is. But in the end, diversification is key, because that's what's going to lead to consistency. So I'm going to jump over to comments here real quick, and then we're going to keep firing through here, guys. Good to see everybody. Make sure you slam that like button. Remember, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. I mean, the truth is, you know, people ask me about Doge along the way, and I specifically have said the same thing over and over again about Dogecoin. You know, it's great for trading, but I wouldn't invest in it long term. But I sure do trade it and have made profits off of it, and that's great. But the truth is, the guy that like invested, quote unquote, in Dogecoin way back when and went all in on Doge because of whatever reason they had, it was undervalued, or they like dogs, or they like crypto, or they like crypto dogs, or they like memes, or whatever, they were right. You know, I mean, the truth is they were right. It's still crushing it. I still think Dogecoin is going to $1 probably by Saturday. But I mean, you know, again, don't trade off of that or anything. I wouldn't. Start trading stocks. How do you approach gaps? Close trades before a close. Yeah, I mean, it depends what time frame you're trading on and everything, man. And obviously, I can't give you like financial advice, but like typically, in my experience, gaps get closed. So I will either buy the gap fill or sell the like anticipated gap fill or whatever accordingly. But the truth is for me, I do a lot of like more shorter term trades and scalps and everything on crypto and more longer term trades or investments in stock markets, or obviously like my longest term investments are in like precious metals or like commodities, just because of like the ease of use, liquidity, solvency, percentage moves, etc. So yeah, Musk is hosting Saturday Night Live on Saturday, and I don't know if that was a question or maybe that wasn't a question. But yeah, on Saturday when he hosts Saturday Night Live, there's speculation that he will at least mention the word Doge, Dogecoin, do a Dogecoin skit, maybe hold up a picture of a Shiba Inu or whatever they're called. Doge father. Yeah, way back when in the last market cycle, he tweeted about Dogecoin when it was like nothing, and the like obviously the creator of Doge like stepped down from it and like denounced it, but they offered him the position as Dogecoin CEO, and he like I don't know, he declined it basically like on Twitter way back when. It was like absolutely hilarious. I mean, this is way before this bull run even happened. It was like the last market cycle. But it's just like absolutely hilarious because he's always been sort of like this Dogecoin troll slash like proponent. And I mean, shit, he's right. technically, technically. But again, though, this just honestly, Dogecoin is a specific example of just how stupid people are and how big these bubbles are. Because the fact of the matter is like Doge is total trash, like long term. It's designed as a joke, but it's not just like, oh, we're gonna make a Bitcoin, but we're gonna call it Dogecoin, and it's gonna be a joke. There's like protocols built into it that make it horrible. Like Bitcoin's protocol is like diminishing like supply. So it's like artificial scarcity through like mining. Doge is the opposite. It literally has exponentially more supply. So where Bitcoin every year there's less and less Bitcoin introduced to the network, therefore you have like a limited supply with theoretically the same or more demand, forcing prices higher. Dogecoin is literally the opposite. Every year, like if there was like 1,000 Doge made last year, this year there's like 1,500 Doge, and the next year there's like 2,500 Doge, and the year after that there's like 10,000 Doge. And now those are made up arbitrary numbers, but that's how Dogecoin works. It literally exponentially creates more Dogecoin every year. So the supply gets exponentially bigger. So 100 years from now, if people are still using Dogecoin and mining Dogecoin, the new supply introduced 100 years from now is going to be exponentially larger than the new supply that was introduced this year. So it's almost impossible for the interest in Doge to grow exponentially in relation to the supply. Therefore, high prices on Dogecoin are literally unsustainable. Like again, maybe they change the protocol, maybe something changes, maybe whatever. But that's all bullshit until it happens. So the fact of the matter is that people that are buying Dogecoin as an investment are dumbasses. They're absolute morons and deserve to lose all their money because it's not just designed as a joke or as like a meme coin. It's literally the protocol built into it is anti-high prices. It literally creates lower prices over time. It's designed more after the dollar, after a fiat currency than, so if Bitcoin is like the crypto gold, the store of value, Doge is like the crypto dollar, the fiat currency. And it's bad because even if you buy fiat currency, at least fiat currency is getting devalued. So it's a 1x effect. But if you buy Dogecoin as an investment, while dollars are getting devalued, while Dogecoin is getting devalued, you're getting an exponentially devalue of your investment, as where the opposite happens with Bitcoin because there's less Bitcoin available every year, and then theoretically there's more dollars available every year. So it's like, wait a minute. Are you trying to swim upstream buying Dogecoin? Yes. But can you swim upstream for a little bit before you get tired and have to take a break? Sure you can, man. You can sprint up that river all the way to $1, all the way to $5. Doge might go to $10. But I'm going to tell you something right now. on a long enough time frame, Doge is going back down, way down. It's just idiots buying it right now. There's way better things to quote unquote invest in. But again, that's my opinion. So, and people don't realize that because people don't do their homework. They literally just buy Doge because it's cheap and it's going up a lot and it's popular. So, but I mean, that's how you know you're in a bubble. So gold, this is our gold chart we've been talking about, obviously breaking out of the top of our descending channel, consolidating. That looks good to me. We're above support. I know people are drawing this as we're below support here. We're very clearly above support, in my opinion. This was our support. This was our support. We're back above it, finding support. But the question has been and is going to continue being, you know, how many times were we in the bullish control zone? And then we went in the bearish control zone. It was basically just a reset for continuation. Here now, we're seeing almost a change of trend. We're entering the bearish control zone, and then is the bullish control zone just a reset? Because more likely than not, I think that we're going to have continuation to the downside. But if we have, see, and again, it's hard for me right now to argue in favor of gold short term, because if all of a sudden the stock market sell off and interest rates go up, gold will see like a reflex sell off, but then it will go back to the upside. So therefore, that rationale tells me gold will go down and then go up. The opposite is that gold just stays in the downtrend and keeps going down. So both situations now, gold goes down. And then the alternative would be is that there's not threat of inflation, which obviously there is. Everyone's talking about it, including Janet Yellen. So that's our first situation, which is where there's fears of inflation, but there's still a sell-off. Second situation is there's fears of inflation, but it's not enough to scare people out of risk-on assets. Third scenario is that there is actual inflation and that somehow gold doesn't sell off, but stocks and cryptos and everything else does. Well, based on the correlation of gold to traditional markets, that's not going to happen. So in both scenarios that I see right now, we will see at least an initial sell-off in gold. But again, could possibly just be a consolidation above support, and then we get our measure move, we get our breakout, and then gold goes to new highs, and then we go into gold-backed currency, and then we overthrow the government, and then everybody gets along happy because aliens shoot us with a happy, happy, joy, joy ray. I mean, any of that stuff could happen. But based on probability and what's happened in the past, I can't think of any scenario where we're afraid of inflation and somehow gold doesn't sell off first, because that's what happens every time. I mean, we had the biggest inflation scare ever of all time a year ago, and what happened? Gold crashed 30%. And then what happened after that? It immediately rebounded almost all of the gains back and then went to new all-time highs. So if theoretically speaking, all of a sudden inflation starts being a fear, rates go up, what's going to happen? Gold's probably going to sell off massively and then consolidate and go back up. So in my opinion, I don't see any value in speculating on if gold's going to go up right now when everything points to gold going down first, and then seeing does it go down first and then go up, or does it just continue on down? So again, that's my look at it. And then silver, obviously we've talked about this, very similar chart, slightly more bullish, outside of the range. I'm not even going to get into silver right now. You guys know I'm massively bullish on silver and whatnot. But I'm looking at now the gold-silver ratio, which I think is more relevant, because with what we just talked about, if we've gotten this pattern right here, and this chart is telling us gold is going to become more valuable in relation to silver, regardless of the direction of gold or silver, what does this tell us? It tells us either gold's going to go up faster to fill this gap, or silver is going to go up slower. So gold's going to just all of a sudden spike to the upside, and then silver is going to just like slowly creep up. So that would make the gold-silver ratio go higher. So is that possible? Yeah, but it doesn't really line up with our situations that we just talked about. What lines up with the situations we just talked about? Well, gold massively spiking in comparison to silver. So what is the most likely situation that would cause gold to spike, this chart to play out, while inflation threats and fear and de-risking in the markets? Well, that would tell me that gold's going to sell off, but silver's going to sell off much faster. So that would be silver selling off much faster than gold is going to give you a much higher silver to gold ratio, telling you that you need a lot more silver to buy the same amount of gold. And now that would correspond with a quick sell-off in the markets, corresponding with higher rates or fear of inflation, that would translate into gold, followed by continuation to the downside, which would tell us that silver would be gaining value on the long term in relation to gold. So that tells me this is probably likely to get a relief rally, and that gold is probably going to sell off and silver is probably going to sell off more violently, regardless of the overall outcome, whether it then continues to the upside and I'm wrong, or it continues back to the downside and I'm right. More than likely, I have a bunch of things pointing me towards this, including fear of inflation. And you saw what happened the second Janet Yellen talked about there might be inflation, they might need to like adjust the rates. The market took a shit. I guarantee the Federal Reserve called her up and we're like, what's wrong with you, Janet? What are you doing? It's not like you didn't work this job before. It's not like you don't know how powerful your words are. And then she got back on and was like, oh, I mean, it's not, there's not inflation. We're not going to adjust rates. You could tell that she basically just got yelled at because she goes, for some time. So all of a sudden she's like using Fed speak. So it's like she obviously got off the phone with somebody. They literally told her exactly what to say, and she did it like the little bitch that she is. So that's how I look at it. And all that stuff is pointing me towards some kind of quick spike, which would tell us a quick spike in yields to the upside, quick strength in the dollar to the upside, quick sell-off in markets to the downside, quick sell-off in gold, followed by consolidation to the upside, and then silver outperforming it. All these things are pointing towards the exact same situation. Everything I'm seeing in all these charts right now is like culminating into a giant single middle finger, like getting ready to flick off everybody for being stupid. That's what I see right now. But it's weird because it's like I'm the only guy who sees the finger and everybody else is just like standing around like telling each other how awesome they are. But not you guys, obviously. You're my fans. You're my peeps. You're my crew. But it just seems like everybody in the market is like so convinced that they're so right about everything. But no one can tell me a coherent story about how they're right. It's really crazy right now. Platinum topped out at the exact top of the range. Got that bearish rejection that we're paying attention to. I expect it to come back down to the bottom of the range. Again, the longer platinum goes sideways right here, though, the more bullish I am on platinum, because platinum could punch up in relation to gold. So maybe gold sells off hard, platinum kind of goes sideways. Maybe platinum jumps up all of a sudden while gold goes sideways. But regardless, the same way I look at the platinum gold ratio, the silver gold ratio, and then the ratio of those precious metals to other things like the Dow tells me the correlation and what's more than likely to happen. One thing's at resistance, one thing's at support. More than likely, the thing at support's going to bounce, the thing at resistance is going to, get rejected. So when I start seeing all this stuff like correlate together, telling me, oh, there's a high likelihood this is going to happen. I mean, it just gives me one more little advantage on the market. So uranium, boom, busted to new all-time highs. This is where we're talking about bearish divergence, and then it just played out to the side. We got that consolidation, and then boom. Now we have hit officially the 382 target. So again, while I said I wasn't ready to get bearish on this thing yet, the fact that we just topped out at the 382 target tells me that this could have literally just been algorithms trying to fulfill that target, and now it's going to sell back off. The uranium trade may very well be overcrowded, and again, this is the type of market where, I got bullish on this on like a weekly, like monthly time frame, and since then, it's over doubled. So in all reality, like URA could very easily see a massive pullback, even back down to like $14, and I wouldn't be surprised if this thing just lost like 33% of its value, and then 10x over the next like decade or 5 years or whatever the bull run ends up being. But again, a lot of these trades are looking, even the good ones long term, are looking overvalued. This is the silver miner, junior miner ETF, SILJ. Look, it did exactly what we said. Got rejected at the top of the range. I don't trust this thing until it maintains outside of our resistance on the weekly. It lines up. It looks just like the regular silver chart. There's too much other stuff going on telling me right now that I'm not ready to get bullish on this thing yet. Maybe I'll buy support down here if it gets down to it. But to me, this, we're so close to breaking this pattern. At this point in time, I'm more inclined to be selling resistance and buying support. I'd rather wait until something confirms or whatever before I start like buying breakouts in one direction or the next. THCX, marijuana ETF, cannabis ETF, overall looks bearish. It's getting closer and closer to 200 exponential and simple moving average. Basically a descending triangle after that parabolic blow off top. Another thing about these that's making me think too is same thing. I'm massively bullish on these long term, but we could very easily have heavy pullbacks below the 200 exponential and simple moving averages. And what happened with cannabis, prior to the last bull market? The cannabis stocks like topped out like a year before everything else did. Like even more than that. They were topped out at like, it was like the end of the year, over a year prior to like the March random sell-off that nobody ever saw coming ever, and no one could have ever expected it. Obviously I'm being sarcastic, but these things had already topped out way before that. So is it realistic to think they're not going to operate perfectly on a cycle and that they topped out again, then tech topped out, now other markets are topping out, and then we're going to all have like a consolidation sell-off with like, basically like a stock picker market? Seems very likely to me. And these things, while I'm starting to dip my toes back into the cannabis sector, I'm fully prepared 100% for drawdowns up to like 50% on these things. YOLO, another one, cannabis ETF. Again, this one is I'm not going to get into all the details with the different ETFs and everything, and essentially like how some have diversified into other things while there was like the cannabis bear market going on, etc. So you can pay attention to what's inside these things specifically, or specific marijuana stocks. But in the end, they all basically look the same. But considering this a potential breakout, and we could now see, a move to the upside, I'm dabbling in some of these things, looking for potential, short-term long positions. But again, I could very easily see this thing having a massive pullback, consolidation, while the other markets kind of just sell off or go sideways, and then eventually this thing re-entering like the bull market. You guys know how I feel about Tilray. We're basically, this has been playing out literally perfectly the entire time. I look at this as we're nearing the end of the 4. So whether time goes and maybe another month or two goes by and we just go sideways, whether we put in a new low, I don't want to see too much of a low down here, but we are basically at my accumulation zone. So again, I've been dipping my toes in the water again with Tilray. We obviously did extremely well on this trade, getting out up over $40. Because you literally, if you get out at $40 and then this thing sells off to freaking $15, you can just take half that money, put it back in. You have the same amount of the stock. You have all your money back, and now you don't even have to give a damn what happens. So, but I mean, again, long term, I'm very bullish on this thing. I mean, I'm bullish on Tilray up to like $300. That's a 20x from where we're at right now. But how long does it take to get there? Maybe a couple years. ACB, this is that gigantic inverted head and shoulders that we've been watching this entire time. And this one is actually starting to be slightly more bullish. We were buying down here at $8, and it's already up like 10%. Now, am I going to look at that as a scalp as we start getting up into these higher areas? Yeah, if it starts showing weakness back here, maybe I'm going to be taking some of my profits off the table. But if we get in at $8 and it goes back up to 16, we can take half our position off the table, let our profits ride, and then just sit there. So we've already taken all of our principal back, and then we still have half of our Tilray position to see, does this thing break to the upside? Does it chop back around? Does it get rejected? But again, massively bullish on the sector overall, less bullish on ACB as a whole. Caterpillar broke to new highs, finally hit our target up here. I still think there's upside potential up to, I really think that if we're going to top out, it's going to be at $250. I don't think we're going to top out just yet. But again, this is why it was such a key area we were specifically talking about. Yeah, maybe we break to the downside, but we found support. 1, 2, 3, 4, 5. This is our 6th time right here. So what I say, as long as we keep buying support and selling resistance, statistically, we're making money on this thing forever. And then finally, when it breaks down from the range, we can take a short position. But in all reality, this long position, absolutely beautiful. Already looking real nice. Now, will we get the whole entire position, though? Will we get that full trade up to, that 265 range? I don't know if we're going to get there. I really don't. I don't see why we wouldn't right now. Overall bullish on the space and everything. But when this thing does top out, when it does sell off, I expect a heavy sell-off. So if we make it to 260, could we very easily go back down to 160 after that? Yeah, but I'll be looking at that as a buying opportunity. I'm very bullish on Caterpillar. This is one of the few things that I could look at and say, do I want to own this company 10 years, 20 years, or 30 years from now without knowing what the world's going to look like? And with Caterpillar, I can confidently say, yes, I do. With something like Boeing, no, I really can't, because I don't know what's going to happen. I mean, if many more jets crash, there might not be a Boeing. There almost already wasn't a Boeing. So, I mean, I don't know. There's not a lot of stuff. Or like, Bitcoin. Do I want to own Bitcoin in 30 years? I don't know that I do. I'd be more likely to buy something like Ethereum if I'm looking at 30 years from now. Do I want to own Dogecoin? Do I want to own, Peloton? Like, there's not a lot of stuff I can look at it and say, I want to own this in 30 years. So, that speaks highly, in my opinion, of Caterpillar. So, speaking of the doggy Dogecoin, obviously, anybody that took the trade back here, anywhere from like 4 to 8 cents, we're absolutely killing it, obviously. Anybody that took the trade back off of support back here at 26 cents, obviously killing it. Anybody that took the sell-off back down to 50 cents, still, up very nicely. I mean, this thing is literally just like a skyrocket. You got to just keep taking money off the table with Doge, expecting it to get to $1 or higher, but forever just taking profits. We just hit our next target. When we got to the 50 cent mark, I obviously said that I was taking profits at 50 cents, and I always front run slightly, but that I was expecting a sell-off, but that this was extremely bullish. We obviously got continuation. We now hit my next target, which obviously I said 50 cents because it's a round number, but the 3.618, 66 cents, that was my next target. I mean, at this point in time, we're just getting to like ridiculous targets. I'm not even calling out any targets over $1. This is the 4.236. I never use the 4.236. I always use the 3.618 as my final target, but this thing is so damn bullish. There's not a lot left to do, because I mean, as long as we're just forever making all-time highs in a blue sky breakout, I mean, I'm not gonna not just keep projecting targets out here. But I mean, I don't want to be that guy who's like, now it's going to $10, now it's going to whatever. But I mean, the 1.618 of this sell-off is basically 93 cents. Again, I think we'll get to $1. I will probably sell something like 97 cents. I'll probably put in sell orders between 97 cents and $1.09, because I would expect either a front run or an overshot. But in all reality, 92 cents is a nice spot in the 1.618. But then after that, the 2.618 is $2.75. I mean, from 63 cents, $2.75. I mean, this thing is, you want to talk about asymmetric, possibility on Dogecoin. I mean, you're looking for an asymmetric trade. This is it. Like, I love ETH and I love all these other cryptos and everything. But I mean, the fact of the matter is, as long as it's the thing to do, and the truth is, let's be real here, new investors are dumb as fuck. And they've demonstrated that through this bull run. And even experienced investors are doing dumbass things that happen in the middle of bubbles. So for all these new investors and Dogecoin and all, like speculators, I can't even call them investors, but people are dumb as shit. So how long can people keep being dumb? Probably for a while. Probably until we drop bombs on each other and blow up the human race. So, like, not to be negative, but I think what's that saying? There's a sucker born every day. Pretty sure there's always gonna be dumbass people. So is the Dogecoin bull run gonna go on forever? No. But do I want to be the guy who tries to call the top of the Doge rally? No, I'm not going to be the guy who's like, oh, it doubled up from a penny to 2 cents. That's as high as it's going to go. No, I'm going to keep calling Fibonacci targets out until this thing blows up to $1,000 and we're all Dogecoin trillionaires, or till it gives me a reason to say, okay, it probably has topped out. But in the meantime, I'm not going to be that dude who gets on here every day and says, crypto's overvalued, Dogecoin's overvalued, people are stupid and nobody's going to keep buying this. I'm the opposite. I think people are dumb as hell and trends are more likely to continue for longer than you expect. So I think if I had a bet right now, is Doge going to go to $1 or back down to a penny? I would say it's more likely to go to $1. And if you want to bet, is Doge going to go up to 275 or back down to a penny, I say more likely going to 275. And if you want to say, is it more likely to go to $10 or a penny? I'm going to say it's more likely to go to $10. But there's a lot of stuff that has to happen in the meantime and a lot of trades we can make. And I'm not just going to set and forget a large portion of my portfolio in Dogecoin because I'm bullish on it as an investment. No, but I will bet on people being dumb as fuck and this being a massive bubble and keep going up. For sure, I will definitely bet on that. I'll keep betting on that, and I'll even keep telling you guys every time I bet on it, and you can do whatever you want. Again, not financial advice. I'm not your financial advisor, but I mean, as long as we keep doing the same thing again, as long as we keep going sideways, resetting our indicator oscillators, getting the hard buy signal, getting the cross back to the upside, and then going parabolic to a key Fibonacci target, I'll probably just keep doing the same thing I'm doing. So, Ethereum, I mean, look, we're almost there now. I didn't think we were going to get there. We hit my last target at 2650, quick, sold off, and stayed bullish since then. So, I mean, you guys know, I don't have to even explain this to you because I do the same thing on every chart, and you see me do it over and over again. Next target is the 2.618, and we literally, as soon as we broke back through that all-time high, we went the better part of the way up there. So, I mean, my next target is still $4,317. Again, I don't like being the guy who comes out here and says $10,000 Ethereum. But, the 3.618 is $6,825. And look, the 4.236 is $9,000. So if we get to $9,000, is Ethereum going to $10,000? Yes, it probably is. But again, I do the same thing every time. You guys see it happen. It just happens faster on some things than others. Ethereum is like the legitimate version of Dogecoin right now, in my opinion. It's going parabolic, but at least it does something. Cardano retesting all-time highs. Charles Hoskinson, still a bitch. But overall, I mean, this thing doesn't look bad. It looks okay. I don't see any reason it's not going to just continue to the upside. XRP, not quite at all-time highs again. Again, I mean, not to rub it in on the XRP holders, but you got to look at this thing as pretty much one of the worst performing cryptos ever in existence. You could argue that it is like the most popular of the worst cryptos. So, I mean, this is like the guy standing there with like his jetpack on and it's like lit and he's just ready for it to kick in and just to like shoot up. And like every other jetpack is like flying and everybody else is racing and he's getting like lapped over and over and over again. Dogecoin has lapped XRP 400 times in this bull run. And like you're just standing there with like your XRP like moon backpack on, helmet on, like biting your teeth down, just ready to go. And it's like, when's gonna be my time, XRP? But I mean, it's probably almost there. It should get there soon. I mean, it can't go up much more without eventually hitting its all-time high again. So again, I think XRP probably going to new all-time highs very soon. You guys will get your wish and be back at $3 here very soon. But in the meantime, literally everything else in existence has outperformed XRP, with the exception of a couple other like name brand cryptos. So poor XRP guys. And the worst part is too, you had to like catch shit from me for like the last year. And even like if you were right, like the one time I did put out like a positive XRP video, it was that I'm buying XRP at 17 cents and then it literally went to 17 cents perfectly. So the only good trade ever to be had on XRP I was in on. And since then it's just been like a giant XRP vor fest. So, but I'm sure I lost some subscribers because somebody out there likes XRP. So sorry about my XRP rant, but I love busting your guys' chops. Riot, and not your guys, but like XRP followers. Riot blockchain still looks like shit. Broke down from support. It did exactly what we said. I knew this was going to get rejected right here. I told you it was going to get rejected. I told you I expected it to get rejected. Riot blockchain is literally just me telling you what's going to happen every time, and then it just happens exactly right. It's like I control this thing somehow. But the fact of the matter is, there was too high a premium on this. The same way there was too high a premium on GBDC. The same as there was too high a premium on MicroStrategy. And eventually, the cure for high premiums is high premiums. Because people will just say, maybe I won't buy Riot blockchain. Maybe I won't buy Riot MicroStrategy. Maybe I won't buy GBDC. I'll just buy Bitcoin. Speaking of MicroStrategy, looks like shit. Expecting a breakdown eventually. Maybe these things consolidate long enough to actually move up. But I'm going to tell you the truth right now. If Bitcoin doesn't start making new all-time highs, Riot will never make new all-time highs. MicroStrategy will never make new all-time highs. And speaking of new all-time highs, look at our boy over here. Coinbase finally hit our next target. Oh, all the people are so bullish on Coinbase. $450 Coinbase. I'm buying. I'm a buyer on Coinbase. Meet Kevin. I'm all in on Coinbase at $400. I'm buying Coinbase at $425. I'm buying Coinbase at $450. Coinbase will never get down to $275. Coinbase will never get down to $250. Well, my dude, Coinbase is at $273. $268 it tagged today. Coinbase has literally never made anyone money since it technically wasn't an IPO, but since it direct listed. No person that ever bought Coinbase has ever made any money on anything other than like a couple minute or hour scalp play. It's still below its 8 moving average. It's still going to go down to its key Fibonacci target. Coinbase is still going to $255. And look at these targets work to the upside and the downside. Because our next target is the 3.618 at 226. And then after that, it's the 4.236. It's the Dogecoin inverse pump. If Dogecoin goes to $2.75 to the upside, the equivalence would be Coinbase going to $210 to the downside. So you could argue that the perfect hedge for Dogecoin is Coinbase, or the perfect hedge for Coinbase is Dogecoin, because all they do is inverse each other. All Coinbase does is go down, and all Dogecoin does is go up. And I'm definitely in a mood today, so I hope it's not like too obnoxious. I honestly miss you guys, and hope everybody had a good last couple days. So I hope it's not coming off as me being like a douche to you guys, but it's just funny seeing how like all this stuff is playing out right now. And I mean, it's hard not to argue right now that we're not in like ridiculous like joke status bubble territory in these markets. So but I'm about to jump over to chat here real quick, check the time and everything. We're at about 1:47, so I'll probably wrap up here pretty quick. I've been shooting for like those 2-hour streams, which have been working out pretty good. So all right, so Lazy Boy says, hang on, let me scroll back because he said a few things, brother. Calling him the Doge Father. I'll be ready to sell the top. Oh, I never heard this before. Interesting. I'm assuming you're talking about the Doge Father thing. Yeah. It was like last market cycle when Doge was like well below a penny, I'm pretty sure it was. He tweeted something out about Dogecoin, and that's when they originally called him the Doge Father and offered him like a CEO position, which he respectfully declined. Yes, try sending Doge to another person. It's crazy cost. Yeah, Bitcoin is extremely crazy right now. Doge is extremely crazy. Ethereum, trying to use Uniswap. The prices are extremely ridiculous right now, which just further, I mean, if you look at like the cost of sending and the fees and everything like that, there's like an indicator that people use for that, telling like how close we are to the market top. Doge bubble. R-Kits, good to see you, brother. He said, Elon is terrible for long-term growth to crypto, in my opinion. So many great projects have difficulty raising money while that crap coin is sucking investment monies. Yeah, I mean, you could argue the same thing about Bitcoin, though, and like every other shitcoin ever made, because every person that ever worked on anything other than Bitcoin essentially has like helped to destroy the market cap of Bitcoin. And while you could argue that some things are useful, like Uniswap or Ethereum or whatever your favorite project is, so that they are legitimate, 99% of all cryptos are like a pipe dream. I mean, very few of them are actually implemented or implemented successfully. Like I could literally like pick like a handful of them. Like what? Binance Coin, Basic Attention Token, Bitcoin, Ethereum, all the stuff built on Ethereum. 99% of that is total crap. And it's just literally being like, well, Ethereum works and I'm built on the Ethereum blockchain, so I work too. Therefore, I create value. But the truth is how many of those things actually do a job and do it good? Not many. So, you could argue that everything other than a handful of coins is bad for the space. But the truth is we need projects to come along, people to work on them, and them to fail in order to have that 1 in 1,000 successes that change the world. And like that's just part of like the innovation. So while I completely agree with you, and there's definitely arguments for like Bitcoin or like useful crypto maximalists, I also do see the idea of betting on like a thought or some revolutionizing or life-changing coin or whatever. But I argued way back since David Portnoy, Elon Musk, like all these people shilling that not only what they're doing is illegal because they're basically like affecting markets, but that like, that the SEC probably will or was likely to or may still go after all these people because there's definitely a fine line between market manipulation and like tweeting out to millions of followers like, hey, I'm buying this, like not suggesting anything, like not telling you what to do, but I'm Elon Musk and I'm getting ready to spend $100 billion on Bitcoin or have already started. Like, so I don't know if anybody else thinks it's a good idea to buy Bitcoin too, but let's just see what happens. That's already like super gray area, like market manipulation, like SEC regulation, like type stuff. But if you're also like top like 10 richest people in the world, like fuck the SEC. Like what are they gonna do? Like, you know what I mean? You're like, oh, okay, take me to court, SEC. Like by the time I like lose a court case, my like net value will be 10x, and the amount that you try to like charge me or fine me will be exponentially less money than the amount of money that I'm making like manipulating markets. It's like the whole argument behind like the silver manipulation. It's like, oh, we're going to fine you $1 billion for silver manipulation, but you made $100 billion. It's like, yeah, okay, fine me. It's like pulling someone over that's a trillionaire for speeding. And you're like, if you speed again, you're going to have to pay another $250 ticket. So you better think twice. And they're like, yeah, okay, I'll never speed again because I can't afford $250. Like, it's all about like the punishment fitting the crime. And in our system, it doesn't. So if you're the richest man alive, like, how's the SEC going to do anything? If you're like, maybe regulate you by owning a company and saying you can't tweet about Tesla anymore. Maybe the shareholders would think it's against their interests, whatever. But like, let's be real here. Elon Musk could literally just quit Tesla, say F everybody, and just tweet about Dogecoin and pump the price up and like just become like the richest man alive, like if he wanted to. So what are you going to regulate him? Is he a bad guy? Is he a good guy? Are you stupid for just not getting on the Dogecoin bandwagon? I don't know. That's again, that's up to you. But he's definitely walking on an illegal Dogecoin / Twitter tightrope. Let's say that. But when you're the richest man alive, like maybe that's the only way you can still get it up. Walking on a tightrope, tweeting about Dogecoin, like, driving around Teslas, sending them into outer space, building rocket ships, drilling tunnels in the ground. Like, you could tell Elon Musk obviously lives a different life. So does he care about the SEC and regulation? I'm pretty sure no. He said, Commander Corn says, LOL, quoted me, I'll bet on people being dumb as fuck. And that's it too, man. I think a lot of people in investing get really frustrated or lose out on gains or like have like mad rants on TV, like a lot of the silver guys or gold guys or whatever, because they're like, this can't go on forever. Like, we can't keep doing this. The dollar's going to collapse. Crypto's a scam. You can't hold crypto in your hands. You can hold gold and property and actual corn, but you can't hold Bitcoin or Ethereum. Like, dude, whatever, man. Even if something is a bubble, it's still going to just keep getting bigger and bigger and bigger. So that's like the whole saying, like, you can't fight the Federal Reserve. Like, you can't fight stupidity. You can't sit on, like, if people keep running a stop sign and then getting T-boned, like, are you going to go sit on the corner and stand there with the sign that says, don't run this stop sign, you're going to get T-boned? Yeah, okay, go do it. Maybe you save one guy's life, but for every one guy you save from getting T-boned, I bet 9 more people get distracted by the sign you're holding up and get T-boned. So maybe there's a net negative effect. Maybe you save one life out of 100 from getting T-boned, but like 10 extra people get T-boned and died because you were trying to help them and they got distracted by the sign. That's my point, but you can't fix stupid. People are so dumb and there's so much stupidity and momentum behind stupid these days that trying to fight stupid, you will never win. It's like you bravehearting by yourself against like an entire army of stupid. You're not going to win. So you might as well just be the smartest guy on the stupid side of the picket line. Like, I mean, maybe not. Maybe you just want to be poor but have good morals. Me, I would rather be a Dogecoin millionaire. But whatever. Again, you know, within reason. XRP is Wile E. Coyote. Yeah, right? That's it, man. Doge is the Roadrunner. XRP is Wile E. Coyote. And it's like, you can root for Wile E. Coyote. And every once in a while, he'll win a little bit. But how many episodes does the Roadrunner just lap him over and over again, hitting him with that SpankCity.com? You know, I mean, over and over and over. Every episode, the Roadrunner wins. But like, 1 in like 100 episodes, Wile E. Coyote like pulls something off. And then the Roadrunner still wins. So that's your XRP right there. Peter Gerd, good to see you, brother. Says love it. I'm not sure which one of my like rants or sarcastic comments you love, but appreciate it, brother. Need to add your own attitude? Oh yeah, for sure, man. Well, I mean, you can't watch one of these videos without catching my attitude. That's a fact. But I mean, I like to have a little fun with it too. I mean, I like to get a ton of information out every video. I like to make sure that everybody learns every video and gets like either some kind of like reinforcement, foundation, strategy. Obviously want everybody to see like my idea of technical analysis and then also my rationale. Because people will be like, ETH's going to $10,000. And I'm like, can you tell me why ETH's going to $10,000? And they're like, because. And I'm like, oh, okay. I'm pretty sure because is not like a reason. But I have no problem listening to anyone's argument, even if it's opposite of what my arguments are or their case or whatever like their reasoning is. But I want to hear like actual facts and proof and reasoning behind it. Either it can be fundamental, it doesn't have to be technical, or technical, but whatever it is. I don't like when people say XRP is going to $9 because, and I'm like, well, because what? Because it'll probably go to 10 or never go to 9. But can you tell me why you think it's going to $9? And if you say, well, based on Fibonacci extensions and this, that, and the other, I have a target for $10. I'm much more likely to at least say, well, you might be right, but I'm not going to get bullish on it till it does this, this, and this. And, you know, it's the same thing I told people this whole entire bull run is XRP is the last thing I want to be involved with because it has the most things going against it. And now here we are, I mean, what, like a year later, and XRP is still like one of the shittiest cryptos. It still is like one of the worst performing cryptos overall and has had the least volatility. And the whole reason we trade crypto is like pretty much the volatility. So you're picking the absolute worst. I mean, you could probably have more volatility in an actual stable coin than XRP. Like, I mean, I hate to say it. It's not literally, but I mean, it's just total shit. And like, I feel bad for people that are like hardcore, like XRP cults, like drinking the Kool-Aid. And now like everybody else that was in crypto for the last like 4 to like 6 years has just absolutely crushed it. And meanwhile, like the XRP army is like barely staying alive on like drinking their own tears to stay rehydrated. Like it's honestly kind of sad. We should all give them a couple Doge so that at least they could be part of this bull run gains. Because I mean, there's still people that bought XRP at like 3 something when they were like showing you how to buy it on CNBC like last bull run. So they're still down 50%, but they probably dollar cost averaged on the way down. So they're probably still down like 30%. So it's very sad, very sad. But yeah, I mean, I try to make these fun, educational, but also, you know, like, I mean, let's be real here. Like I trade, I have these stuff up on my screen all day, every day. And like, you know, you can't go a little crazy without like being a trader for, you know, years or whatever, staring at charts for thousands and thousands of hours. So it's nice to get on here and kind of vent it out. And that's what I've always enjoyed about not only the channel, but also the group, not only like getting to rant a little bit, getting to like express my views and just get it all out there, but also like the interactions from the community and getting to like cut up with you guys and like tell you, quote unquote, how I really feel. Cause you know, I'm not holding back. But yeah, I think I'm gonna wrap it up right there at the 2 hour mark. Appreciate everybody that came by today. Obviously, these markets are, I mean, they're basically just like 95% of the stuff we're looking at is doing exactly what we expect consistently. So definitely just expecting all this stuff to consistently do the same things. What did we do? Did we skip Bitcoin? Did I not actually look at Bitcoin? I think I did. I think I went straight to the Doge. So I guess we could probably look at Bitcoin before I get out of here. This is like overall looking like fairly neutral to me. A lot of sideways action. We got back above the 821 cross, bearishly sold off pretty heavy, bullishly pumped back above pretty good. So we got a bullish engulfing candle. We're still above the 821. So I got to be bullish on Bitcoin. Problem is that while we basically went sideways, we moved the indicator oscillator all the way back up to the upside. So now a rejection of this range or slightly higher is going to correspond with the rejection of the red slope line or, you know, around that region. And then also this 821. So I want to see like a close above 58,000 and then I'll get bullish on like stepping back up to the top of the range. But right now, I would say I'm bullish to neutral. Based on like some of our volume metrics, decent amount of momentum on the Fisher, real choppy on the waddah explosion. Again, we had massive bearish momentum, lost that momentum, and now we're starting to basically, I mean, kind of gain some bullish momentum, but not really. Our volume candle on the sell-off has been much bigger than any of our volume candles on the buying, including like this little topping one right here. So to me, this almost looks like a bearish reset. And then if we look at the on balance volume, essentially, you know, we got a nice pushback up here, came back down to the retest, bounced it, and got like basically like a lower high bounce on that. So, you know, to me, it looks like there's still enough selling taking place in relation to the buying that I'm not ready to get bullish on this just yet. And then if we look at our futures chart as well, I mean, what I tell you guys, I expect us to basically come back up, fill the gap somewhere in between like 60,000 and, you know, 62,000. And we came back up to exactly 59,400. So could we still push higher, fill the gap and get rejected? For sure. Could we easily just be done here and continue selling off? For sure. I'm not ready to get like overly bullish one way or the other. We are getting a hard buy signal. So we could see slightly less, slightly lower, like low here and then push back up in continuation. You know, this could be the top and we could sell off, or we could just keep moving up. But in my opinion, too early to tell right now. Bitcoin has not done anything. We're literally back at February 21st prices. So it's literally done nothing. Oh, you know what we could do though? This, just taking a quick look back at this Bitcoin dominance chart. Okay, we got the push down. We got the final push, or what I'm expecting to be the final push. We got the push down to the 618. This is on the weekly. I know I've been on the daily on everything, but we got the push down to the 618 and the 236 of the massive sell-off. So if before we got down to the 0 and the 1, the 0 in red here, we moved all the way back up now. That's, you know, obviously came back up above the 618 and then came all the way back down to the 236 in red. So what would I expect to happen right here? I would expect to find at least temporary support off the 236 and the 618. It is possible we blow through this, but I'm telling you right now, if we break this 236 range in red right here, I think there's a 95% chance we're coming back down to 35% Bitcoin dominance or a new all-time low, which would tell me that altcoins are going absolutely parabolic, massive blow off top, like massive gains, while Bitcoin just has modest gains, or at least in comparison. So this to me looks very likely that we either turn around right now, which is what I'm anticipating, and have a big correction and it's just bigger in altcoins, or I'm completely wrong and this blows through the support level, you know, which we've been getting heavy selling coming in for week after week after week. But all the way down from, I was expecting us to turn around either at the 0.5 or the 618/236 area right here. So I was expecting Bitcoin dominance to turn around between 51% and 45%. So that's my margin, which very little margin of error. So within that 6% Bitcoin dominance, if this doesn't turn around right away, I expect Bitcoin dominance to sell off roughly another like 10 or 11%, which is going to be massive moves for some of these altcoins. I think we're just going to see rocket ship after rocket ship, like Ethereum and Dogecoins left and right. Or we see a very heavy sell-off that the altcoins suffer more and at least some kind of bounce back on Bitcoin. Now, whether this bounces back and then continues lower, or whether it finds support here and continues higher, we have to play it by ear. But this is a lot of bearish action, very steady for a long period of time on a weekly inside the bearish control zone, closing the gap between the blue and the pink right here. Multiple weeks upon weeks upon weeks of bearish action. So again, I'm not trying to call the bottom on this thing. More than likely, the trend's going to continue to the downside. But if we're going to reverse right now, is when we're going to do it, in my opinion. If we're going to reverse, it's either now or never. So if we do not start seeing Bitcoin strengthen in relation to altcoins, I expect a gigantic pop on altcoins. And the reason I say that, pop as in massive move to the upside like rocket ship, the reason I say that is the only way Bitcoin dominance is going to change is if it keeps going down right here. That means Bitcoin is either going down faster than altcoins, which almost never happens in a sell-off, or altcoins are going up faster than Bitcoin is going up, which typically happens at the end of a cycle, or Bitcoin is going down while altcoins go up, which again, almost never happens, but typically happens at the end of a cycle. So, and then the alternative would be, you know, obviously if this bounces to the upside, this would say Bitcoin is going to the upside faster than altcoins, which means it's finally breaking out of its consolidation to new all-time highs, in which everybody jumps back into Bitcoin from all their shitcoins. So they could go sideways while Bitcoin goes parabolic. Or the final would be, you know, Bitcoin sells off 20% and altcoins sell off 50% or something to that effect, which we have not seen happening throughout this entire bull run. Every time Bitcoin has been selling off and altcoins have been selling off, Bitcoin has been selling off the same or more than most altcoins, which again only happens in massive bull runs. So if all of a sudden we see Bitcoin selling off and altcoins selling off more than Bitcoin, that would tell me that we're probably entering a bear market. So there's a lot of cool things, underlying things, and like, you know, things we can get from this chart specifically. So, but there, I just want to touch on that one too. It's one I obviously like to talk about fairly regularly, but have not talked about recently. So, but yeah, there, I almost forgot to do Bitcoin TA on a Bitcoin stream. So you guys can remind me of that stuff too in the future. But yeah, that's it, guys. All right, I'm going to wrap up after that. Glad I didn't forget Bitcoin. I would have felt like an idiot. I'm like, wait a minute. But I guess I was just so excited to go to that Doge, that doggy Doge coin, that Godfather Elon Doji. But yeah, that's it for today. Not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. Appreciate everybody. Check this out today. Make sure you like and subscribe. I'm sure you guys are already. Share with your buddies on whatever social media you please. And make sure you check me out for probably do a static video sometime between the weekend. But I should probably do like a Friday market wrap up if there's anything worth talking about, which there should be. There should be plenty of action. Last week was kind of like blah. But this week we should get some massive like traditional market / crypto going into the weekend. Saturday Night Live coming up. So I would imagine like expect a Friday like 3:30 live stream. So, and I think overall people enjoy it. So, well, there you have it, guys. Crypto Trend Trader. And that's a wrap up for today. Appreciate everybody. Thank you for showing up. Thank you for all the positivity. And good to see everybody today. Good to see a nice amount of viewers showing up here. And if you're watching this later on, hey, good to see you too. Crypto Trend Trader, and I'm out of here.